Hello traders everywhere, Adam Hewison here, co-founder of MarketClub and president of INO.com. Welcome to today's show. We're going to be talking about some of the most important markets in the world, probably things you haven't looked at in your portfolio, but we'll be talking about the commodity and futures markets and why they're so important and why they deserve a place in your portfolio. In fact, some of the biggest moves have occurred just today, and I'm talking about gold and crude oil. So why don't we get started right away? We'll take a look at the markets, the trade triangles, as we normally do, and you can see really the Dow is in a strong trend still, plus 90 on the NASDAQ, plus 90 on the S&P. So they're still in positive trends. But look at gold, strong downtrend, minus 100. It doesn't get much stronger than that. Oil's in a trading range, minus 55. It's down about $2 today, which is a big move. And the dollar is still in a trading range against the euro and many of the major currencies. The big move today is SINA, and that's up 7.9%. That's based on our trade triangle, the Sina Corporation. So let's get started right away. We've got a lot to cover. I want to show you our World Cup portfolio, which has done extremely well. And also, we're going to look at the crude oil market and gold and some other commodities that you may not be so familiar with, but deserve your attention. So let's get started right away. Let's go to those charts. So here we are, futures, commodities. And as we go to, here's our homepage. This is brand new on our homepage today, top markets. So you can search for top stocks, top penny stocks, top ETFs, top Forex, just by the click of a button. Easy, easy, easy. So I'm going to go right to my portfolio because I want to show you the portfolios we're talking about and what you can do with them. So here we are. This is the commodities section. Now, when you talk about commodities or futures, you're really talking about wheat, corn, cocoa, sugar, lean hogs, live cattle, orange juice, coffee, you name it. These are major, major markets. Now, one of the things you can do if you want to in Market Club is to create a portfolio of just futures. And you can score them, just very simple, just click here. And it tells you right away, looking at live cattle, it's going down. Cocoa, going down. Wheat, headed lower. Sugar, lower. Coffee, lower. These are all markets. You can see these little red triangles with the yellow around. That signal just occurred today, Wednesday, February 20th, and 732.75 was the signal on wheat today. And if you look on the signal on corn, it came in at 697.50. So these are markets that you can trade quite easily. These are futures markets, but there are ETFs that replicate some of these markets, and they're very, very interesting and powerful. Let's move on to the World Cup portfolio. The World Cup portfolio is comprised of 6 markets. We put this together 5 years ago, and we'll show you the results, and they've been quite outstanding. So they comprise of corn, wheat, and soybeans. That's food we all have to eat, so they're very important markets for us to track. Next one is crude oil. Well, crude oil is incredibly important because the country runs on number 2 diesel fuel. All of our produce is shipped from various parts of the country, and the expense of crude oil, you may have noticed this recently in your tank when you went to tank up your car, it's gotten quite expensive. How is that going to affect the economy, and what's the demand for crude oil? Now, crude oil is a worldwide commodity. We consider this to be the #1 commodity in the world because everybody uses it. You have India coming out of really into a middle-class society, wants to buy nicer cars, they want to drive nicer cars. China, same thing there. So the demand for crude oil is going to continue to be very strong, plus you have a diminishing resource. It's not an infinite supply, it's a diminishing resource. So that's going to be a very interesting market to watch in the years to come. Gold is down tremendously. It's down $26.95, almost $27. That's 1.67%. That is a huge move. You've seen, we're trading at $15.79. Right now, what this is, they're not trading gold. They're trading money. People are getting killed in this market who've been long, and they're finally throwing in the towel, I think probably today or tomorrow on this market. Next market we look at is the dollar index. Now these are all markets we've chosen to check out and see. And the great thing about the World Cup portfolio, as a member of Market Club, you have access to this every single day. And let me show you how that works. So let's go to our Market Club homepage. And you'll see that we're looking at, on the home page, on the side here is model portfolios. We have 3 model portfolios. We have the global strategy, the perfect ETF portfolio, and the World Cup. So the World Cup, just click on the World Cup, and what that does, it takes you to a page. It shows you the Market Club's World Cup portfolio. So you scroll this down, and you can see right away the returns we've been having in this market, and they've been stellar. The first year we ran this, we had a return of right under here, over 500%. That was largely due to, guess what? Crude oil. Crude oil traded $140 a barrel. That was back in 2008. Then 2009, a respectable 48%. And then 2010, 35%. Now you may be thinking right now, well, this trend is going down, but all of a sudden in 2011, right here, you have a really great return of 186%, which really shows you the potential of the commodity markets. These are the World Cup portfolio. This is what we're looking at right now, right here. Last year we had a return of 57%, which is very, very nice. It's actually our third best return in 5 years. So very, very excellent returns using this portfolio. I'm going to show you exactly how to use it and how you can utilize this if you wish in your own trading. So let me just go back. We'll scroll down here. So here we have the positions. Here's corn. It's a 5,000 bushel contract. It's traded at the Board of Trade. And you can see our current position is sidelines. However, we have the alert on 220.13. Enter on a red daily trade triangle at 688.25. So if the market hit that level, you would basically be going short on this market. So again, on the wheat, we have a position that's short, and you can see we're short from 732.75. That's $7.32, 0.75 cents. And we have a stop now, an exit position at 752. So if we get stopped out of there, we'll take a loss, but that's okay because we're diversified. There's only 1/6 of our portfolio. So as we go down, you'll see soybeans, same contract, 5,000 bushels, same as the wheat. The current position is on the sidelines. So you do have sidelines positions here, and we show you exactly what to do. So the action there is enter on a red daily trade triangle. It's to go short at $14.05 and a quarter. So let's go down further. Here's crude oil. We're on the position, sidelines position there. We're going to enter on a green daily trade triangle. I'll show you what that is later. And on spot gold, now remember, gold is down to over $20 today. We're short from 16.53. I think the last quote was 15.79. So you can just extrapolate that. $74. That's $7,400 on 100-ounce contract. It's a great profit on a very short period of time. We have our stops in there at $1,617.66. If it hits there, we'll be out. We'll be stopped out with a profit. So that's an excellent trade. And also on the spot dollar index, we're sidelines on that. So actually, I should say one thing before I go any further. Joining me as always is Jeremy Lutz. Jeremy, say hi to everybody. I do apologize.
No problem. How's everybody doing out there today?
We've got a lot to cover, and I'm so anxious to get started. I completely forgot to introduce you to Jeremy. So anyway, Jeremy, as always, is here to work with me and get these things up and running, and does a great job. So let's just move on. So this is the World Cup portfolio. Now further down here, we show you the exact trading rules of how to use this and how the trade triangles work with the World Cup portfolio.
I might add that these rules are universal to the entire commodities world and are our suggested trading method for them.
Absolutely. As Jeremy said, these are suggested trading rules for the world of commodities. Now, you have to remember, this is not written in stone. You may find something else that's easier for you to trade. You may be even more of a longer term trader or an intermediate term trader. These are pretty short term trades. And the nice thing about it, though, you put your stops in and you forget it. You don't worry about it. So this is a structured approach there's no fundamental or discretionary input into this portfolio. So it's all on an algorithm we've developed and has worked incredibly well over the last 5 years. You can see the returns. The average return, I think, is well over 100% every year. So the risks involved, we would consider this portfolio to be a fairly high risk for most investors because of the leverage involved in futures. Now, the thing is with futures, what you can always do is basically dumb down the contracts. You can basically lever up, meaning you put more money up than it's necessary to trade one contract. That delevers the overall portfolio, and of course it reduces the amount of risk and also the amount of return. And the portfolio, as you said, it trades corn, wheat, soybeans, crude oil, gold, and the dollar index. Now, all of these are available to you as a member of Market Club. The initial investment we say on this particular portfolio is $50,000. That's basically levering up twice. So instead of just putting the minimum margin, we've actually put double the margin. And if you have less than $50, you can also trade mini contracts. It's usually about 1/10 the size of the contracts we have here. So that's very, very possible to do. So that is our World Cup portfolio. And as I say, the returns have been stellar. 501%, 48%, 35%, 186%, and 57%. And always, always, always remember to trade with the stops we recommend, so there's no guesswork, there's no emotion goes into us. We update this every night around about 5 o'clock or 4:45, so you know the next day what you need to do for that day. So it's very, very simple. But again, these are what we consider to be the most important markets in a portfolio in commodities. Again, food, it's corn, wheat, soybeans, which we talked about, and crude oil for energy, spot gold for some case against inflation or deflation, whatever it might be, because we trade, by the way, I forgot to mention, we do trade these markets on the short side. So if you're not familiar with trading on the short side, if you're uncomfortable trading on shorts, then this is probably a portfolio is not for you. But there's a lot of money to be made on the short side of the market. And to give you a good example, let's just go to the gold contract right now. Gold, as I said, has had a big drop today. And basically that drop is really reflected in the World Cup portfolio. So we're doing extremely well in that position. You can see our last position was right here at 1653, and currently we're trading at 1579. That's $21, $7,400 profit on one contract. So it's very, very nice to have those kind of profits in your pocket. Now we are oversold. Not to say we can't reverse from here, but it's like catching a falling knife at this level. I would think somewhere around these levels, around the 1550, 1540 level, where we found support back here. Now this is just my analysis, not the trade triangle, it's just my analysis. Somewhere around these levels here, we'll probably find some support just because we've been there before, and that's what a lot of traders will be looking at. So let's see how that plays out. But let's
take a look at just real quick while we're talking about the commodities. If we look at the silver contract as well, or the spot price.
Okay, let's
and
go.
Follow it up with a big move on crude oil today as well.
Yeah, sometimes what happens in the markets, you have a situation where you have one market under a lot of pressure, and traders will actually have to liquidate other positions, which causes a more of a ripple effect. Did you put this in already?
I did not, no.
All right, let's see. Well, I'll show you how to do it. It's very simple. If you're a trader, just go to our commodities section, or you create a portfolio. You just click on the plus button here and just type in silver. Now we want spot silver, so we want to look under Forex because that's the market we track silver under. There it is, silver spot. Click there. And it puts it right into your portfolio right here. You can see, so everything is red, 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 meaning down, down, down. And you can see we're down 2.9%, so it's down even further than gold. Huge liquidation in this market today. And a part of it is just because people just want to be out of the market. And this is not a particularly good sign, but the pattern is very similar to gold. And you can see we're getting down to the area where it found support last July, which is right down here, somewhere around the 27 to 26 level. I think that's where we're probably going to find some support in this market. But do not think because it's here and it was here that it's cheap right now. It's not cheap. This market could come down and just spend a lot of time just going sideways before it reverses. But when it starts going back up, you're going to know because of the triangles, they're going to start turning green and give you some early warning signals that this is the time to get into this market. Again, if you look at this market and our position, you'll see that our short position on the weekly is $30.76, and we're currently trading at $28.64. So you've got $2 profit in this market, which is a huge amount of money on a levered basis. So let's just clear the screen again, and let's take a look at crude oil, because crude oil really has, I think it's the #1 commodity to watch in the world, because that really affects everything. It affects companies, it affects deliveries, it affects just the whole tenor of commerce around the world. So let's go back to the portfolio, close this up. I'm going to go to my commodity portfolio, my World Cup portfolio, doesn't matter, I have them both places. And let's take a look at crude oil, which is right here. And as you can see with the trade triangle, it's a little bit mixed because we've had signals both ways today, but the weekly certainly tells you you should probably just be on the sidelines for the moment. There's the weekly kicked in today, 220 at 95.50, currently trading at 94.86. These are all happening today. We're not making this up and sort of looking backwards and say, well, you should have, could have done this. This is what's happening with the trade triangles. It's very, very powerful. How far can we go back down in this market? Well, you have a monthly trade triangle, which is a much longer term, saying we're still positive. So I would wait for this market to begin to regroup and then go up and wait for those triangles to turn green. But you are oversold now, huge volume. You can see the volume we're seeing in this contract today, just absolutely astronomical, way off the charts in terms of volume. So a lot of liquidation, and that has been caused, in my opinion, with the situation in gold. People were liquidating gold, they were getting margin calls, it fed it over to the crude oil market, which is, believe it or not, that's how it works sometimes, and you see a general pressure on the market. And anyway, I think we've covered commodities pretty quickly, but they're important. You should look at them. You should also look at the World Cup portfolio. I think it's a really helpful tool for you to look at. And even if you don't trade it, just follow along, see if it makes sense to you, see if those trade triangles work, and how you can put this particular portfolio as a part of your overall portfolio. The one thing is, I know they've done studies at some of the academia, and they have said that, it's my phone, I beg your pardon, they've made studies at academia on commodities and how they're not connected cyclically to the regular market. So it's a counter-cycle move, or it's a non-aligned asset, and you can trade them and do very well. Actually, it lowers the risk in overall commodities. That's overall portfolios. That's what the general consensus was in academia. And I can really tell you that from the fact it does do that. It really has a non-correlation factor with regular markets, so that's what you want when things are hitting the fan. So again, we are covering commodities. I hope you've enjoyed this little sort of tutorial on the World Cup portfolio, on commodity markets in general, and why they deserve a spot in your portfolio. Hey, I'm Adam Hewison, along with Jeremy Lutz. Thank you so much for joining us today. We'll see you next time.